Your roadmap to the latest in auto. Welcome to Highway Herald. President Trump's latest tariffs have wiped out a staggering $1.7 trillion from the American stock market. The S&P 500, Nasdaq, and Dow have all plunged, with tech giants like Tesla, Apple, and Nvidia taking billion-dollar hits. Investors are rattled, fearing a looming recession as trade tensions with Canada, Mexico, China, and the EU escalate. Is this the start of a major economic meltdown? Or can the market bounce back? Let's break down the chaos and what it means for the road ahead. Number 1. The market crash. What triggered the meltdown? The recent stock market collapse stems directly from President Trump's aggressive trade policies. After securing a second term, Trump introduced sweeping tariffs on imports from Mexico, Canada, and China, escalating tensions with key trading partners. His goal was to boost American manufacturing and cut the trade deficit, but instead, it triggered market panic. In the first week after the tariffs were announced, the Dow plunged nearly 900 points, while the S&P 500 and Nasdaq dropped 2.7% and 4% respectively. Tesla took the hardest hit, shedding 15% of its value, over $125 billion, in a single day. Other tech heavyweights, including Apple, Microsoft, Nvidia, and Meta, also slumped between 2% and 5%. Trump tried to calm the storm, calling it a transition period and promising long-term benefits. But market analysts weren't convinced. Ross Mayfield, an investment strategist, observed, "The administration seems comfortable with short-term pain if it means achieving broader trade goals." Uncertainty has left investors scrambling, adding to market volatility. The S&P 500 is down 9% from its all-time high, and the Nasdaq 100 just logged its worst single-day loss since September 2022. With no clear resolution in sight, investors are bracing for more turbulence ahead. But the tech sector wasn't spared either, and Tesla took the biggest blow. Number 2. Tesla and the tech sector take the hardest hit. Tech stocks bore the brunt of the market collapse, with Tesla leading the downturn. The company's stock has shed a staggering $565 billion since Trump took office, making Elon Musk the biggest individual loser. Musk, who holds 12.8% of Tesla shares, has seen his personal wealth shrink by over $72 billion. It wasn't just Tesla feeling the pain. Amazon's stock dropped by $277.9 billion since Trump's inauguration, while Nvidia lost nearly 12% of its market value, roughly $403 billion. The broader tech sector in the S&P 500 slid 4.3%, marking its worst performance in over a year. The market's uncertainty is driven by Trump's unpredictable tariff strategy and looming retaliation from China and Europe. Tesla's sharp decline underscores just how vulnerable tech stocks are to trade-related volatility. Dan Ives from Wedbush Securities called it a perfect storm: tariffs, tech weakness, and economic uncertainty. Musk's response? Characteristically blunt. "We can't plan for chaos," he tweeted, pointing to the challenges Tesla faces in navigating the shifting economic landscape. Already grappling with slowing sales and production issues, Tesla now faces added pressure from higher costs and reduced global demand, problems that are unlikely to ease anytime soon. But Tesla isn't the only company under fire. Global trade tensions are creating chaos across multiple industries. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore number 3. Trump's tariff war with Canada, Mexico, and China. The stock market turmoil is directly tied to Trump's escalating trade war with America's largest trading partners. Trump imposed a 25% tariff on imports from Mexico and Canada and doubled tariffs on Chinese goods to 20%. Unsurprisingly, these countries fired back with retaliatory tariffs on American exports, adding to the market's volatility. Canada hit back with $21 billion in tariffs on American products, including fruits, vegetables, and liquor. Mexico raised tariffs on U.S. goods to match Trump's increases. Meanwhile, China imposed a 15% tariff on American coal and liquefied natural gas, plus 10% tariffs on crude oil and agricultural products. The back and forth has created a cloud of uncertainty over global trade. Peter Orszag, CEO of Lazard, warned, "The markets hate uncertainty, and that's exactly what Trump's tariff strategy is creating." Economists fear that prolonged trade tensions could push the U.S. into a recession. Despite growing pressure from investors and lawmakers, Trump remains defiant. He recently stated, "We're bringing wealth back to America. This is how you win." But market analysts aren't buying it. The continued volatility reflects deeper concerns about how long the U.S. economy can withstand the pressure of escalating trade tensions and retaliatory tariffs. But economic uncertainty isn't just affecting trade, it's fueling political tension as well. Number 4. The political fallout and economic concerns. The political reaction to the market collapse has been swift and intense. Senator Elizabeth Warren accused Trump of playing with fire and putting the U.S. economy at risk for political gain. Even some Republicans have voiced concerns. Senator Rand Paul warned, "When markets tumble like this in response to tariffs, it pays to listen." Meanwhile, Commerce Secretary Howard Lutnick defended the administration's strategy, arguing that the tariffs were necessary to protect American businesses and create a level playing field. But political pressure continues to mount as the market remains unstable. Economic warning signs are piling up. The yield on the 10-year Treasury bond has dropped to 4.2%, reflecting fears of a slowdown. The Wall Street Dollar Index has hit its lowest point since early November. Global markets are also feeling the pressure. Japan's Nikkei 225 dropped 2.5%, Taiwan's TAIEX fell 2.5%, and Hong Kong's Hang Seng Index slid 1.5%. Recession fears are growing. Goldman Sachs increased the odds of a U.S. recession within the next 12 months from 15% to 20%, while JP Morgan Chase raised its forecast from 30% to 40%. The longer trade tensions drag on, the greater the risk that the U.S. economy could slip into a deeper downturn. But what does this mean for the market's future? Let's find out. Number 5. What's next for the market and the economy? Investors are watching key indicators closely to gauge where the market is heading. The upcoming inflation report, Federal Reserve interest rate decisions, and potential government measures to stabilize the economy will play a major role in shaping market behavior. Corporate earnings are already feeling the strain. Delta Airlines recently lowered its profit forecast, citing worsening economic conditions. If more companies follow suit, the market downturn could accelerate, adding pressure on Trump's administration to respond. Analysts suggest that Trump may need to soften his tariff stance to prevent further market damage. Kevin Hassett, president of the National Economic Council, acknowledged that while there are reasons to be optimistic, the current market instability is troubling. The path forward remains uncertain. Ross Mayfield from Baird Investment Strategy warned, "Markets hate uncertainty more than anything else, and right now, uncertainty is all we have." Unless Trump's administration can provide clearer trade guidance and restore confidence, market volatility is likely to persist, and the risk of a deeper recession will continue to loom over the economy. Verdict: a fragile recovery or more pain ahead. The American stock market is walking a tightrope. Trump's aggressive tariff strategy has created a cloud of uncertainty that's wiped out $1.7 trillion in market value and sent tech stocks into a nosedive. Retaliatory tariffs from Canada, Mexico, and China are only adding fuel to the fire, threatening to deepen the economic strain. So what happens next? The market's ability to recover hinges on Trump's next moves. Will he double down on tariffs or try to negotiate better terms with key trading partners? Investors are anxiously watching inflation data and interest rate decisions for any sign of stability. The road ahead is murky, but one thing is clear: Trump's economic gamble has thrown the market into uncharted territory. What do you think? Can Trump's tariff strategy bring long-term prosperity? Or are we heading toward a deeper recession? Let us know your thoughts in the comments below. We want to hear from you. And before you go, don't forget to subscribe to Highway Herald for the latest updates on market trends and automotive news. Thanks for tuning in. We'll see you in the next one.